Yo, what is up? Back with another banger. Um, Been a while since my last video. I had Thanksgiving and then I didn't have my computer for a week, so that's the reason behind that. Bit disappointed that I couldn't get any work done during that week because that is a lot of time to not be working on this stuff. But I've come back with better ideas and eager to get back into it, talk about what I've been thinking about over the past week, and continue with the series. Day 3 technically, but more like day 10, I guess. Day 12, something like that. I don't know, it's been a while. But I'm back at school now, also focusing on that. Mainly focusing on this though. Alright, I'm going to hop into the charts here. And looking at this here, I just have the VIX up right now, but let's go back over here. So this was today. And today I want to talk about one thing, mainly having an edge. Alright, here, I'm actually going to bring this up here. Oh. I don't know how to move this around. There we go. Fucking hell, I'm retarded. Okay, having an edge. So, what is having an edge? A lot of people think they have an edge when they don't. Having an edge is essentially what you need in order to trade productively. To tell you one thing, this is not psychology. Spell that right? Yeah, spelled that right. Here's one thing that people always get wrong. They think that there's an issue with how they think about trading, which is completely wrong. That is a complete, red herring if you're worried about your psychology when you're trading. And this is what a lot of gurus push is your trading psychology. You need to think more about this, blah, blah, blah. They're wrong. Don't listen to them, all right? It's about your edge. And what an edge is a definable and measurable statistical method that allows you to get superior entries where you're actually making a profit. And in short, an edge means that you're better than the average person. I'll put that down. Because if you think about the market, there's going to be one person that you, say if you're entering a long trade, you're going to buy from someone who is selling to you. And then if the market goes up, you're selling to another person who's then buying to you. Now, if you buy from a person, that person sells, and their stop loss is right above where price goes through that rips through their stop loss, right? You're in profit, they're out of it now. That's one person is gone now already just from that trade. Then when you sell again, say someone buys off of you at that high price, and then price goes down, gets rid of that person's stop loss, that's another person that just got fucked. And you were the one that profited. And it happens actually a lot more than that because the market is very unpredictable. So they say actually only 90% of people are unprofitable and only 10% of people actually make profits. So that means it's not even the average trader, as I've written here. It's like more the median, I guess you could say. Because most people are going to lose because people don't have an edge. And so, what can you do about that? What? Sneeze? Oh man, that's the worst. God, I feel like I'm just getting edged. Oh my god. Oh, I feel it still. I'm a little sick still. Oh well though. We're still gonna get into it. That's why you need an edge, because otherwise you're just betting on the market and it's gonna be useless. So you need to first think about what will allow you to get better information than most people who are trading. And that comes down to a few things, really. If you get data faster than anyone else, that's an edge. If you get better data than other people, that's another edge. If you have tools that other people don't have, that's another edge. And so a lot of people will say, the people that utilize that first one of getting faster data, those are your high frequency traders. Those are your big firms. I doubt any retail traders. I certainly don't have access to data that's much faster, and I don't have algorithms to act on that data before anyone else does. In terms of better data, though, that's where things like level 2 data come in that I talked about in the last video. That's where things like bookmap come in, like this. And when you get level 2 data, when you get volume data, that is a form of data that a lot of people don't have. So if you use this, then you can make way, 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 way better decisions. Just by the fact that the average person doesn't have this kind of data. So just by looking at this already and being able to use it intelligently. Now I'm not saying if you just have this you're gonna win, but if you have this, this is the tool that you need to win. And if you can use this properly, well, yeah, then you're gonna be profitable. But my video stopped. Oh well. I'm coming back here. So as I was saying, an edge comes from faster data, which is what big firms will have. Better data, which is what I have in this case, and what you can also get through Bookmap. And then the third one was better tools. And this is referring to indicators that still have an edge, that aren't priced in. Although most indicators are already priced into the price of an asset. So, you know, you're not going to be able to use them that much. Like, people say that they use MACD or, you know, a stochastic. Really, you need to use those in confluence with other things, because they're not signals. They're maybe just things that can support your thesis at the end of the day. So, to get an edge, you need to focus on maybe all three of these, preferably just one of them, and get really good at it. For instance, Bookmap. And so that brings us into today. What was happening today. Here. Yeah, coming down here. I'm on the 5-minute right now. So, market opened, and I was kind of just watching this, and you start to see it immediately chug up, and then we hit these levels over here. These were important levels. Just previous day highs. Pretty huge. And importantly, in between that, there's not really anything. Look at this. Yeah, absolutely nothing. So the kind of idea was, all right, we're going to clear this, and we could just see that and then see a sweep down, or we're going to see a continuation. If that's the case, then we're just going to keep going up, and which is what eventually happened. So what I was doing on Bookmap, if we find 930 here, zoom out on this a little bit. Here, I'm trying to, where is this? I want to look at right here, 10:15. Okay, right here. I'm looking right here. So, we're looking on this. We immediately see these volume levels. Alright? Price is coming up, price is coming up. Takes out this volume, and we start to see this volume form up here as well. So price comes back down here, doesn't clear this, and then we see it going back up. At that point, there's no more orders waiting here. So if there were still orders, then you would look for a retest of the level. But since there are no more orders right here, you're looking at the next level past that. So it goes up there. We see it come down a bit further this time. This was right here. And at that point, yeah, that's pretty expected, because at this, we hit this previous level over here, right? We were still hitting this bad boy. So you would expect a bit of a bigger move, but the fact that we didn't go below this, good sign for a bullish day. We pushed a little higher, make here, and then I see price come down here. Sells are happening here, right? Sells here, and look, these do not get taken out. if volume is, if there's a lot of orders waiting somewhere and they don't get taken out, and you're already bullish say you're bullish or you're bearish, and the retracement doesn't take out the orders, like in this case, I'm bullish, and then the retracement does not take out all of these orders, that right there is your confirmation to enter more. And then you look here, we also have, what is it? A low volume node. I think I talked about this in the last video. If not, I'm going to rewatch them, see if I talked about low volume nodes. If you look here in the volume, there's a significant dip. So what that would do, that would be telling me, all right, I'm going to enter at the top of this, and then I'm going to place my stop at the bottom of this, because it's very likely that price is going to react off of this little area and not go through it if it is bullish. If it's bearish, it'll probably go through it right away, in which case it would probably keep on going down here, even past through this high volume area. So you wouldn't want to set your stop lower. Low volume nodes are great because they allow you to set really tight stop losses. So what you could do during this time is right here, you grab one of those. When you see price come down here, yeah, that was at, I believe, 6749. 67. Oh my god, I want to kill myself. 6749.50, wasn't it? Yeah, right here. And then, say I normally hit like a 5 RIR, Vista Reward, I mean. But you could have gone way higher though. I mean, look, this ended up taking out a 13. That's what I love about this trading style, really. When you utilize things like low volume nodes, then it's really easy to get these high risk to reward and pretty high win rate trades as well. And so that wasn't entirely what I made this trade on. There was also one more tool. If we're going back up to, where are my words? Here they are. Here, better tools. Here is a very important tool in anyone's repertoire. That'll be VIX. All right. So here, I've already marked out where the day started at 9:30. VIX is basically a measure of the volatility of the S&P or of ES. And how it works is this value, right now it was ranging around 20 at the start of the day, measures the volatility of the S&P. And generally, higher ones mean that it's more volatile, lower ones mean that it's less volatile. You don't need to know what the exact points represent. But what is also important to understand is how the delta in volatility impacts what is happening with price trends. The fact that it's decreasing here means that as price goes in one direction, it's becoming less volatile, meaning that that direction is becoming more confirmed. So as price goes down, that is a sign to become more assured of your bias if you're in a trend bias. If you're in a range, then it's actually going against that, because it going down is maybe a symbol of absolutely no trade, price action swing. If you're just like, no trends are happening, price could just stay neutral, nothing can happen. But if you're already in a trend and volatility is going down, that's a pretty good indicator that the trend will continue at least for the next little bit. So with that in mind, around 10 right here, I see that price has dropped a significant bit since market open. So that's pretty good confirmation that we're heading all the way up to this up here. And then once we hit this high up here, of course, we chop around for a little bit now. And then price eventually decides that it's more bullish. I wasn't paying attention to the market at this point, and continues to head up, where then it chops around a little bit more. But that is what is really important for you to note down, is that an edge comes from faster data, better data, and better tools. And if you don't have an edge, you're not going to succeed in trading at all. It's not your psychology, it's your edge, pretty much. So, what you can do as a new trader, as someone who has been in it for a while but is still struggling, is to constantly be looking out for things like these. I would suggest staying away from indicator hopping and probably away from faster data. At this point, better data is probably the best way for you to go, because that is realistically the easiest way, through software like Bookmap, or through things like Depth of Market, or other heat map software, or just time price opportunity charts. Anything with level 2 data in it will give you a significant increase in ability over the average trader. So, I mean, that's about it for this video. It's pretty late already. It's 11:30, goddamn. I wasn't going to make this, but I realized I hadn't made any videos for the past week. Kind of dropping the ball on that, but I had some real life stuff going on. And, you know, I'm happy to be back, though, now. Should be a good week of trading. I'll try to come up with a video every day and post that. Or, I mean, I will. It's not trying. I'm just going to do that, obviously. Like, duh. And, yeah, I'll see you in the next video, I guess. I'm probably going to talk about volume nodes and go a bit more into volume, because I briefly touched on that in the second video, but I want to talk a bit more about how to use that instead of just it as a concept. Anyways, deuces.